Going on, gangsters, OGs. Nasdaq's trading to some really high premiums this past week. Continue to do that at the Monday Open. It was seeking higher prices. I personally am looking to short the market right now. The entry I used here was that little inversion fair value gap, which actually the integrity of this inversion fair value gap fails, and you'll see how in a second. But so the whole day of Monday was bullish, but you can still make money if you're offsides. You just have to be quick and cool with it. You know what I'm saying? You got to be quick and cool with it. Like when you're offsides, when you feel like you're offsides, you just gotta have some low-hanging fruit, low-hanging objectives. You know, my take profit is at the first fair value gap that price could run into from here, because currently where price is at is an all-time high. But this whole trading day, like Monday, I'm recording this on Tuesday, but Monday was a bit like the only medium impact news driver was at 8:30, so it used that news as the inject of volatility for the open, and it kind of priced in a premium, and it kind of just stayed stagnant for the rest of the day. Sorry, not stagnant, but it consolidated for the rest of the day. Not much movement. I was able to catch this short because it was right after, or kind of like in a macro where all this data is coming through. And at first I was using the inversion fair value gap, but that fails there on that candle. So technically the inversion fair value gap failed here, but it could also mean that price just isn't delivering as perfectly as it could be. But that doesn't mean that I'm wrong. That doesn't mean that price isn't going to go down, because it still has the wick that it can be pricing into. The wick itself is viewed as a gap. It is a premium or discount array. Wicks are used to book price, and a lot of people don't believe that. A lot of people don't really use wicks for anything. They think they're just like nothing. But you'll see at the end of the video how it's used to book price. There is digging into that wick where I have my stop loss. That wick, that's where price is digging into right now. And you notice that the bodies stay below the 50% mark of that wick, otherwise known as consequent encroachment of that wick. Gucci gang, Gucci gang, Gucci gang, Gucci gang, Gucci gang, Gucci gang, Gucci gang. Spend 10 bands on a wedding ring. So right now the Nasdaq is at all-time highs. So people are trying to short the market right now, but what it's doing is it knows people are trying to short the market, so it's continuing to take out those stop losses, building it higher and higher and higher, because the timing might be off. The market will come down eventually, but the timing could just be a little bit off, and you can still make money short in the market. Me, I'm not like this. Trading at all-time highs is really difficult, because you don't really want to go long on all-time highs because it's at an all-time high. It's kind of just a weird time to trade right now. I know I've said that before, but it's not as bad as the tariff war. Like when Trump got into office and started the tariff war, that's when the price was like extremely volatile, extremely bad. Gucci gang, Gucci gang, Gucci gang, Gucci gang, Gucci gang, Gucci gang, Gucci gang. But yeah, not a very not a super, not a good trade. I was like, after the fact, I was kind of disappointed I got into this trade. It just wasn't really good as far as the entry. But I guess I had enough conviction to stick with this trade, because it swept buy sell liquidity again for like the fourth time that morning. It then violated one of the buy side imbalance, sell side inefficiencies. That's when I deemed it an inversion fair value gap. Then it failed. But just because it colors outside the lines doesn't mean that you're wrong. It just means that price isn't delivering as perfectly as it could be. That's why it's hard. You know, you want to be precise, right? You want to be precise with your stop loss. You want to be precise with your targets, but sometimes it's just not as precise as you would expect it to be. And that's fine. That's why you gotta leave room for error. But yeah, it was a bad trade, but logical stop losses and low-hanging fruit objectives, like I chose the first fair value gap instead of the second fair value gap, because I knew it was kind of like it wasn't like a rock solid trade. It was a decent trade idea, but it wasn't bulletproof at all. But sometimes, even when you're wrong, if you use good logic, it can help you. Can't believe Canelo lost the fight. I kind of can, though. He's like pretty old. He looked like slow, and like kind of fatter than he looked before. Oh man. But yeah, it was a decent trade to start off the week. I'm gonna be pretty patient. There's a lot of like big news coming out this week, so there's gonna be like a lot of volatility, a lot of manipulation. So I'm just gonna be real stingy with what I'm looking for. I'm looking for shorts. And if short doesn't present itself, then it's just not gonna get in the market. Right now, currently, the CPI, so Red Folder News, is going to drop in 27 minutes for me, so I'm just recording this video right before I get back onto the chart and see if I can find anything for Tuesday's trade. If not, it's no big deal though. That was it. This is going to be a short video, but I'll put the Fibonacci on the screen right now, and you'll see how none of the bodies closed above the halfway mark. I think I wrote some notes. I chopped this video down a couple minutes because I went a little too long. It was like a 15-minute video. I didn't think it needed to be that long. But yeah, not the best trade, but it was alright, I guess. I mean, it worked out alright, but I don't like getting lucky, you know? I shouldn't be getting lucky at all. So I was kind of dubbed it like just a learning point. But yeah, I'm just waiting for price to like distribute lower. Like it's just keeps them building in this premium. I'm just like, okay, well, like you're gonna have to distribute some orders to the downside. So if it just keeps going up, like that's a really bad sign for like the economy. It means like we're gonna crash. can't just keep going up. It has to offer fair value. It has to like distribute orders. Um, yeah, going up like it's been doesn't mean that the economy's healthy. It means that it's kind of cooked if it doesn't go back down soon. It means we're not in a healthy economy. Which obviously I know we're not, but fuck. I don't know what I wrote there, but yeah, it was an easy first trade of the week, I guess. Um, it goes a little bit lower than that, but not by much, and then it just consolidates for the rest of the day. Pretty chill, pretty chill. Let me know. Let me know what you think about the mic. Alright, that's it for now. Talk to you guys later.